Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Visa is arguably one of the best business models ever created. The company basically takes a skim on a huge chunk of economic activity around the world. And it's an extremely profitable business, and the stock has done extremely well for investors as well. But what do you need to know about the company's operations, its trends, and what we're actually getting when we buy the stock? That's what I want to dig into today. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And don't forget to check out the Motley Fool's top 10 stock picks to buy right now. I have a link to that in the show notes at the bottom of the page, fool.com/ASYM. So let's get into Visa. And I wanted to start with a high level look at the business because this is always a great place to start. Revenue has grown at a compound rate of 11.1% over the last decade. Just a phenomenal result. Two things that I want to highlight here. You may notice that the trajectory of revenue changes a little bit in 2016 and then in that 2020, 2021 range. Those are actually when Visa increased prices and so took a little bit more from each transaction. That's the reason that we see that kink in revenue in those two places. So basically their take rate of each transaction has gone up over time. If we look at net income, the numbers don't follow the same straight line, but continue to increase very steadily. And that net income margin of 51% is just phenomenal. Free cash flow is also another great feature of Visa, just a cash machine, grown 11.2% on a compound annual basis over the past 9 years. That basically just takes out the low cash flow numbers at the very far left of the chart there. So that's why I did 9 years in that calculations. Otherwise, the numbers would have been even higher. And over the past year, $18.7 billion in free cash flow. The other thing that I want to show is margins. And these are kind of crazy margins. You don't see this for almost any company. Gross margin is nearly 100%. So that means on each transaction, the revenue that Visa has almost all profit. There's very little cost that goes into each transaction. Operating margin is just phenomenal too. It hovers around 67%. So you don't see operating margins over 50% very often, much less 67%. But what I want to highlight with this, and this is what I think was really interesting going through this exercise, is where Visa generates its revenue. From a geographic standpoint, Visa is almost 50-50 domestic and international. That hasn't always been the case. You can see that going back to 2017, international volume used to be a fair bit higher than US volume, but that has changed over the years. The other thing that I thought was interesting is that volume is not increasing all that much right now. There's a lot more options to pay for goods in a digital world. Economic activity has slowed a bit, but that was something that really stuck out to me putting these numbers together, is that this is not really the same growth machine that it once was. And I'll get to why that's important in just a little bit. And before that, I want to get to the payment type. And the interesting takeaway here is that credit cards used to be the highest volume, and now we're much closer to 50-50 credit and debit. One of the reasons that could be the case is because debit card transactions are much lower cost for merchants. So they would actually like to push you to a debit card transaction. Now, I don't know if those kind of incentives is actually what's moving the market, but that's one of the impacts that moving from credit to debit has for the ecosystem as a whole. Now, from a financial perspective, I wanted to highlight a couple of things because it's hard to argue that Visa isn't just a phenomenally profitable and sticky business. But the question is it a growth business? And that's where I think investors really need to think about the two things that I talked about earlier. One is that volume is not growing all that significantly. And the other is that the two reasons that Visa has grown revenue pretty sharply over the last 10 years is because they've had two major price increases. So how much further can they increase prices? And I think the answer is not a lot. There's a lot more competition today, whether it's other credit card networks or other digital services. And remember, Visa isn't really something that we're dealing with directly. Even a credit card that you may have in your pocket actually comes from a bank, not from Visa itself. And the merchants who are actually paying the 2.5 to 3% fee to take Visa cards. If they keep pushing that higher, they're going to look for alternatives as well. So there's a balance there, and I'm not sure how much farther Visa can really push their fees. But what we're paying for as investors is you're paying for a growth stock. The price to earnings multiple is 30 right now. Enterprise value to sales is 15. The reason that may make sense is because this is such a high margin business. So this is not a cheap stock. And this is one of the reasons that I actually sold my Visa stock not too long ago, because it just got so expensive and I'm seeing much more competition come into the market. But that may be the wrong move, because this is a phenomenal business. Like I said, it's very sticky, but understanding why the business is growing, I think, is really important. And I think the biggest driver over the last decade is really those price increases, not necessarily the volume increases that we may have seen really for decades at Visa. But what do you think about Visa right now? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.